The West thinks solar panels are cheap. China knows the truth. They are eating the silver market alive. Most people look at the price of silver and see a number on a screen. They see a chart that moves up and down based on inflation data, or what the Federal Reserve decides to do with interest rates. But that is a distraction. The real story is not happening on the paper charts of the Comex in New York. The real story is happening in the industrial ports of Shanghai and the solar fields of the Gobi Desert. We are witnessing a resource drain so massive and so systemic that historians will look back on this decade as the moment the United States officially lost control of its strategic destiny. To understand why, you have to look at something that seems boring on the surface but is actually terrifying when you do the math. It is a technological shift in how human beings harvest energy from the sun. For the last 20 years, the solar industry has relied on a specific type of technology called passivated emitter and rear cell, or PERC. For short, these are the standard P-type solar panels you see on rooftops in California and solar farms in Texas. They are decent technology, they are reliable, they are cheap, and they have done a good job of getting the world addicted to solar energy. But P-type panels have a limit. They have a ceiling on how efficient they can be. They degrade over time, especially when exposed to light, which is ironic for a device designed to sit in the sun. China controls over 80% of the global solar supply chain. They realized years ago that P-type technology was a dead end. They knew that to dominate the next century of energy, they needed something better. So they quietly began a massive industrial pivot to a new standard called N-type cells, specifically technologies like TOPCon and heterojunction, or HJT. These new cells are superior in every way. They last longer, they work better in low light, and they do not degrade as fast. But there is a catch, a massive catch that almost nobody in the Western media is talking about. N-type solar cells are vampires for silver. The old P-type cells used a silver paste on the front to conduct electricity, but the new N-type cells need silver on both the front and the back. They require significantly more silver per watt of energy produced. We are talking about a 50% increase in silver consumption for every single panel that rolls off the assembly line. And this is not a small niche experiment. China is not building a few of these factories. They are converting their entire industrial base to this new standard. Reports indicate that China is bringing over 1,000 gigawatts of N-type capacity online. This is a number so large, it is hard to visualize. To put it in perspective, the entire installed solar capacity of the United States history is a fraction of what China is building in just a few years. And every single one of those gigawatts is hungry for physical silver. Not paper contracts, not derivatives, real physical metal. This creates a mathematical problem that cannot be solved by printing money. You can print dollars, you can print euros, you can even print yuan, but you cannot print silver. It has to be mined. It has to be dug out of the ground, crushed, refined, and melted. And the geology of our planet is not cooperating. Most of the easy silver has already been found. The ore grades are falling. We are having to dig deeper and process more rock just to get the same amount of metal. And while supply is flat, or falling demand is going vertical because of this solar pivot, this is why we are seeing such strange behavior in the global silver markets. If you look at the vaults in London and New York, you see inventories dropping continuously. It is like a slow leak in a tire that eventually leads to a blowout. The metal is leaving Western vaults and it is heading east. It is being loaded onto ships and sent to Shanghai, where it is immediately consumed. Industry does not hoard silver like an investor hoards gold. Industry uses it. When a silver bar is turned into conductive paste for a solar panel, it is effectively gone forever. It is extremely difficult and expensive to recycle that tiny amount of silver out of a dead solar panel. For all intents and purposes, that silver has been deleted from the global stockpile. And this brings us to the United States. The US is in a mess of its own making. For most of the 20th century, the United States held a massive strategic stockpile of silver. The government understood that silver was a critical material for defense, for electronics, and for industry. But starting in the late 1960s and continuing through the 90s, the US government made a catastrophic strategic error. They decided that money was just paper, and that strategic metals were a relic of the past. They sold off the stockpile. They sold billions of ounces of silver into the open market to suppress the price and to raise a little bit of quick cash. Today, that stockpile is effectively gone. The United States is naked. We rely almost entirely on imports to feed our industrial machine. And who are we relying on? We are relying on a global market that is increasingly dominated by our biggest geopolitical rival. China knows exactly what they are doing. They are not just buying silver to make solar panels to sell to us. They are buying silver to secure their own energy independence. They are building a wall of real assets around their economy. Look at the import numbers coming out of China. They are staggering. The official numbers from the central bank show one thing, but the numbers from the Shanghai Gold Exchange and the import data from Hong Kong show a different reality, a much more aggressive reality. They are sucking the liquidity out of the West. The premiums on silver in Shanghai have been consistently higher than the price in New York or London. This is the market screaming at us. It is telling us that the physical metal is worth more in China than the paper promises are worth in America. This arbitrage cannot last forever. Eventually, the physical shortage breaks the paper price mechanism. We saw this happen with other commodities like palladium and rhodium. When shortages hit, the price does not go up in a straight line, it explodes. It goes vertical in a matter of weeks or months. And when that happens with silver, it will not just be investors cheering, it will be major industrial giants panicking. Imagine Apple, Samsung, Tesla, and every solar manufacturer in the world suddenly realizing that they cannot get the metal they need to build their products. They will not care what the spot price on the Comex is. They will pay whatever it takes to keep their factories running. This is called inelastic demand. If you need silver to make a missile guidance system or a high-efficiency solar panel and the price of silver triples, you do not stop buying silver. The cost of the silver is a tiny fraction of the total cost of the device. You pay the triple price and you move on. But that panic buying creates a feedback loop that sends the price to the moon. The solar industry alone is now consuming a massive percentage of annual mining supply. Some estimates say it is approaching 20% or more just for photovoltaics. And remember, that is with the old technology. As the N-type transition accelerates, that percentage is going to climb. And it is climbing at the exact moment that other industries are waking up to the properties of silver. Silver is not just a shiny metal. It is the most conductive metal on the periodic table. It is the most reflective. It is antibacterial. It is essential for the brave new world of artificial intelligence and electrification. You cannot build a high-performance server for AI without silver. You cannot build an electric vehicle without silver. You cannot build a 5G tower without silver. The entire future economy is built on a foundation of silver, and we have let the foundation crumble. The miners are trying to keep up, but they are fighting a losing battle. It takes 10 years to bring a new mine from discovery to production. 10 years. The demand shock is happening right now today. The supply response is a decade away. That gap, that deficit, is where the opportunity lies for the few people paying attention. But there is a darker side to this story, a geopolitical side. We have seen China place export controls on other critical minerals like gallium and germanium. They restricted the export of these metals to the West as a warning shot. They were demonstrating that they have their hand on the throat of the global technology supply chain. What happens if they decide to do the same with refined silver or with the high-tech solar pastes that the rest of the world relies on? What happens if, on January 1st of next year or the year after, they simply say, no more exports, we are keeping it all? The price of silver in the West would not just double, it would decouple from reality. We would see a bifurcated market where the price in Shanghai is one thing, and the price to get physical metal in New York is something completely different. This is the scenario that keeps strategic planners awake at night. It is the scenario where the paper market defaults. The paper market on the Comex is leveraged hundreds to one. For every ounce of physical silver in the registered vaults, there are hundreds of ounces of paper claims traded by hedge funds and banks. This works fine as long as nobody asks for their metal. It works fine as long as everyone is happy, trading paper back and forth. But when industrial users start standing for delivery, when they start saying, I do not want the cash settlement, I want the metal, the game of musical chairs stops. And right now, China is pulling the chairs away one by one. We are watching a slow-motion train wreck of the US dollar system expressed through the language of commodities. The US dollar is backed by debt. It is backed by the promise that the US government will pay you back in the future. But silver is backed by physics. It is backed by the fact that it is necessary for the modern world to function. And as the trust in US debt erodes the value of things that are real, goes up. This is why the N-type solar revolution is so critical to understand. It is the catalyst. It is the straw that breaks the camel's back. It is the source of relentless, unpriced, sensitive demand that drains the vaults regardless of what the Federal Reserve does with interest rates. The solar panel does not care about the yield curve. The solar panel just needs silver. And let's be honest about the green energy transition. The West has committed political suicide to pursue a green agenda. We have shut down nuclear plants, we have shut down coal plants, and we have bet the farm on wind and solar. And by doing so, we have handed the keys to our energy grid to the country that controls the solar supply chain. We have swapped dependence on OPEC oil for dependence on Chinese silver and solar panels. It is a strategic blunder of epic proportions. But for you, the individual investor, this blunder is an opportunity. It is the most asymmetric bet in the market right now. You have a finite asset that is being consumed and destroyed by industry. You have a production cliff where miners cannot produce more. You have a geopolitical rival vacuuming up the supply. And you have a Western financial system that is still pricing this asset like it is 1990. The price of silver today is arguably the cheapest asset on the planet relative to its utility and its scarcity. If you adjust for inflation, silver is trading at a fraction of its 1980 high. That makes no sense. It is an anomaly. It is a glitch in the matrix. And like all glitches, it will eventually correct. When the correction comes, it will be violent. It will wash away the short sellers and the paper traders. It will reward the people who actually hold the metal. The people who understood that wealth is not a number on a bank screen, but an ounce of something real in your hand. So look at the solar panels on your neighbor's roof differently next time. Do not just see green energy. See them for what they are. They are silver vampires. They are eating the global supply. And every time another gigawatt of N-type capacity comes online in China, the noose tightens around the Comex. This is not just about making money. This is about protecting yourself from a currency regime that is losing its grip on the physical world. The cycle is turning. The flow of gold and silver from west to east is the defining economic trend of our time. Do not be on the wrong side of history. The window to act is closing. The physical shortage is already here, hidden in the shadow inventory of the Shanghai vaults. The question is not if the price will explode. The question is when. And when it does, you will want to be holding the weight, not the paper. I am Jeff, and you have been watching Orange Dots. If you want to survive the transfer of wealth that is coming, you need to pay attention to the physical world, not the digital illusions. Subscribe, and I will see you in the next video.